you have 12 months until you're selling your company, which is an amazing milestone. So kudos, right? But how do you make sure that you're ready for it in terms of your taxes and even your financial planning? So the first step when you're 12 months out is just selecting your team, making sure that you have everybody in line for what's going to be a big transaction. Your personal attorney, the company's general counsel, your financial planner, your brokerage firm, your accountant, making sure your payroll team at the company is ready to report these transactions and be a resource for any stakeholders like yourself or even employees that you have. And starting to clarify, what does an exit strategy look like for you and your particular role inside of the company? So you're likely going to be staying on. What does that mean for your salary? What does that mean for options? What does that mean for, do I want to stay on a year? Do I want to continue working? Who am I going to be working under? And so getting clear about, what am I going to do here at this company after I've basically sold it? And then the 9 months before you've got your team, you're going to start compiling your documents saying, I've got these stock certificates, I've got grant agreements, I've got exercise information. And so you're also going to connect with the company's CFO to see at the original issuance of those shares, what did the company assets look like? So we can determine if you have qualified small business stock and get $10 million in capital gains tax-free. And then, if you don't have that, maybe you want to explore things like creating your new company. And, do we do a QSBS rollover because we haven't met those requirements yet because of a holding period? And so we can start looking into strategies of, okay, what do we have and what is it looking like? And then at 6 months, you've compiled all the data, you've got your team, reviewing your cap tables and saying, okay, this is what my exact payout looks like. And then making sure you have run projections with that cap table and saying, okay, if I do nothing else and I just take this money, what is my taxes going to look like? And making sure that I've set aside enough money from the sale of my company to say, I need to cover my tax bill first and foremost. And then setting a hard exit date with the company that's acquiring and saying, it's great to say that you want to do it in the summer, but when is the summer? Is it June? Is it July? Is it July 31st? Is it that date? You get clear about how much money am I receiving and what is my date of closing. And then also when you talk about this, talking about, am I going to get installment payments? Am I going to get a lump sum of cash? Likely I'm going to be receiving stock. And so what does that look like for me in terms of what am I receiving and when am I receiving it? And then, if you're starting your own company, this is when you start looking at setting it up and identifying opportunities in the shares that you're receiving. Can I make an 83B election? Can I do QSBS with these shares that I'm receiving? And then 3 months out, you start really putting the pedal to the metal in terms of tax reduction strategies. Am I wanting to be charitable? If so, do I look at a donor advised fund where I can gift highly appreciated shares? And if I'm getting cash, do I just give cash to the fund? And the nice thing about those donor advised funds, I can give the money to the donor advised fund, take the charitable contribution deduction on my tax return, but I don't have to give it to the charities all in that 1 year because that's a pretty big amount of money likely. And so you maybe want to give it over the next coming years. You want to give it to multiple charities. And so you don't have to give it right away. And then creating harvested losses from your portfolio to offset, the capital gains you're going to have from selling your company. Because if this is any year to harvest loss, it's a year where you're going to have a huge capital gain. And so you want to reduce it as much as possible because all you're doing with harvested losses is saying, I'm going to reset my basis to a lower amount. And I'm going to, in essence, keep similar shares because I still believe in those shares, but I'm going to work to offset the current gain that I have by taking the losses now. And then you're going to maybe explore creating trust funds with your lawyer because you have children. And if you're in a high income state such as California, setting them up in such a way that your trustee is in a different state that could save you money. Establishing separately managed accounts or brokerage funds so you can put the funds into it. It's not enough to say, I've got this cash. I want it to work for me. I want it to grow. I want it to be something that continues to be a source of income for me. And then also low-hanging fruit, but maxing out my retirement accounts, such as IRAs and 401ks. And then if you're starting your own company, exploring things like defined benefit plans. And then all of a sudden you're at the day of selling and this is great. You've sold your company's shares. This is an amazing moment for you. Think about where you started. But in terms of mechanics, it's like, make sure I get my funds, make sure that they settle, make sure they're in the account for the amount that they said they were going to do. And then from there, you sit back and you enjoy your moment. And if you've hired a great team, they're going to take it from here. They're going to make sure that you get the cash. They're going to direct the funds to the donor advised fund, your trust accounts. They're going to move it to, your separately managed accounts. They're going to start selling all the positions for the harvested losses. And then once they've done their part, somebody has to report it all. And that's where I step in and I say, okay, we've planned, we've projected for all this. We know what it's going to be, but we got to actually file it and tell it to the IRS and your state. And we're going to take care of that. And then we're going to pay the funds that we planned for. There's no surprises. We're knowing what we're going to pay. And so that's the biggest part of taxes, is just knowing, how much do I pay? How much do I need to set aside? And so it's not a surprise come April. So in general, this is a really big moment for you. Really enjoy it. I feel like when we do this for people, like, you get caught up in all this minutia, and there's a lot of it, but just really enjoy the day, right? This is an amazing milestone for you, your family, your employees, your other stakeholders. So congratulations.